Hi all, welcome to Demystifying Accounts. So here we are going to see an illustration of the sum, how to present the share capital in the balance sheet of the company as per the schedule. So we'll see with an illustration sum. So on continuous learning of this accountancy concepts along with the examples. So this is for accountancy class 12 part A volume 2 accounting for companies, and this is for 2026 examination. So which is very clear, and out of this book we are going to see the first example, what is issued capital, what is subscribed capital, what is authorized capital. So let me explain with the meaning of all these three before getting into the illustration sum. So what is authorized capital? So how the share capital is being divided? So the share capital is basically divided into authorized, issued and subscribed capital. So authorized capital is nothing but it refers to the amount which is stated in the memorandum of association, and also this is the maximum capital that a company can issue as shares during its lifetime. So the maximum capital which the company can allow to be issued as shares during its lifetime itself is called an authorized capital. The next one is issued capital. Issued capital is something like the company is decided to issue this much of capital, this much of shares to the public, then it is called an issued capital. And it is not necessary that authorized capital should be equal to issued capital, because it completely depends upon the company's decision. Then subscribed capital. Out of issued capital, how much of shares subscribed by the public, then it is called a subscribed capital. So these three meanings are very clear, I guess. So let's see an example. So first we'll understand the meaning of authorized capital, issued capital and subscribed capital. And from the question we'll place it in the authorized capital, we'll place the issued and subscribed as well as from the illustration we'll see. So if you see an illustration 2A, on 1st of April 2019, Chetan Limited was formed with an authorized capital of 22,50,000. So we are supposed to write the authorized capital of 22,50,000, which is divided into 22,500 equity shares of rupees 100 each. So authorized capital is very clear, which is 20 to 50,000. Okay. Next is issued capital. Issued capital is something like the company has decided to issue, right? So how much the company invited the application is 18,750 equity shares. So 18,750 is the shares, out of which it is multiple into 100. So each share is 100 rupees. So 18,750 into 100, which is 18,75,000. So the authorized capital is very clear, and issued capital is also very clear. From the statement we could able to understand and we could able to match it with the requirement. So the next is the amount was payable. Which amount was payable? This 100 rupees. 100 rupees split is given as below, that is on application. On receiving the application, 30 per share. On allotment of shares, it is rupees 40 per share they will be collecting it, and on first and final call they will be collecting 30 per share. So 30 plus 40, 70, 70 plus 30, 100, which is matching with the face value of the share, that is rupees 100 each. So the split is very clear, and also we have taken authorized and issued capital. So now we need to find what is the subscribed and the paid up shares, and subscribed but not paid up shares. So we need to find the split up, because the issue was fully subscribed. So the 18,750 was fully subscribed, and the company allotted shares to all the applicants. All money was received except the first and final call. So this is the due amount. This is the due amount, first and final call. So on 3,500 shares, so except the 3,500, so out of 18,750, 3,500 shares are yet to be received, for which part? Only for the first and final call, that is 30 rupees per share. Okay, so what we have to do here is subscribe capital. So here the calculation come. So 18,000, which is 18,750, out of which we are getting, that is 18,000. So 18,750, out of which that is 3,500 shares are yet to be received, right? So which is 15,250. The amount which has been subscribed and fully paid up is 15,250. 250 shares. 15,250 shares which we got from deducting 18,750 minus 3,500 which is yet to be received. So we are getting 15,250 of face value of 100 rupees which is 15,25,000. And next portion is subscribed but not fully paid. How much not fully paid? That is 3,500 which we also know, and we also deducted that from this amount, right? So 3,500 into 100 which is 3,50,000. And less calls in arrears. What calls in arrears? Because the first and final call not yet received, right? So the first and final call amount is 30. 30 into 3,500 which is obviously 1,05,000. So 30, if you see, 30 into 3,500 which is 1,05,000 yet to be received. That is calls in arrears. So we are deducting the 1,05,000 from the fully subscribed but not fully paid up shares, which is 3,50,000, which is 2,45,000. And out of that 2,45,000, if you see, this 15,25,000 is subscribed and fully paid, and subscribed but not fully paid is 2,45,000. So the total amount is 17,70,000, which is the clear amount that is going to be appear as share capital in the balance sheet under share capital, that is under the column equity and liability shareholders fund, that is share capital is 17,70,000. This is the answer. So first we need to identify the authorized capital and issued capital, and out of issued capital how much have been subscribed, that we need to take into account as a third step. And subscribe, out of that subscribe, how much fully paid, how much fully not paid. So we are adding those things and taken into consideration that these are the two things which we are going to receive, in our business, right? So this is the first thing that we have received in our business, 15 lakh and 25,000 which is fully paid. But 2 lakh and 45,000, the 3,000, that is because the subscribe but not fully paid, so this is yet to be received. So 2,45,000, totally the equity share capital is 17,70,000 for this, and this is going to appear as share capital in the balance sheet column. So I think this example would be much more clear. So let's we'll see more examples each and every day. We'll try to cover more examples, so along with the concepts, to have a very strong foundation. So now it is, I think from this example, it is easy to understand what is the difference between these kinds of capital, and how to plot these capital, and how to make the share capital, and how to enter this amount. So with all deducting the call in arrears and subscription and fully paid, not fully paid, everything are taken into account to make the share capital amount to appear correctly in the balance sheet. I hope this would be helpful. If it is so, kindly comment so that we'll continue with the other kind of analysis for 2026 examination. So with that note, if you are interested, kindly do like, share and subscribe the channel. And thanks all for watching.